If you've ever heard about net worth, it is probably in reference to celebrities because they tend to have impressive net worths. Net worth is not money in the bank. It is not money in the bank. It does not mean that they could write you a check for billions of dollars and you could go cash it. It's not how that works. As an example of a very wealthy, net worthy person, here we go. This guy operates Amazon. This is not his bank account. If you were to take everything that Amazon has and sell it off and then get his portion of it, this is how much money he'd have. And that's also taking all the cars he has and selling them, all the houses he owns and selling them, any property he owns, selling it, any stocks he has and selling them.
Basically everything he owns.
Everything he owns. And you pay off everything that he owes, that's how much money he would have. You do not get to this amount of money by keeping all of your money in the bank. Everything that they make, they invest in something. Investing in property is a really good place to invest because property is always going to go up. Stocks tend to go up and down. We'll look at those in a second. But property always, I don't want to say always. If a dump opens up by your house, it's going to go down. But property values usually always go up. Yes?
Is that like all the money he spent?
No. I don't know how much money he spent. This is if you liquidated his assets. If he were to die and had nobody left to, because he has a wife. If you were like a single person and you weren't going to like leave your house to somebody, if you die, you don't need your car anymore, you don't need your house anymore. So they take all your stuff and they liquidate your assets and they sell it all off, and then your relatives get the monies that are left over. That's really morbid to think about, but honestly, that's the only time your net worth really like comes into play, because as long as he's alive, this money is not in the bank because he has houses, he has businesses, he has buildings and property and stocks, and he has stuff that's worth this much. Paintings, ridiculously priced paintings. If he were to sell it all, that's how much money he has. Now, a lot of his wealth is probably invested in Amazon because he's the guy who owns Amazon. This is Amazon's stock price as of today. This morning, it started out at $1,724 for one stock. How many stocks are there? A lot. He has most of them. That's why he is the runner. He gets to make the decisions. So at 11 o'clock, it was down to 1,006, and then it went back up. Currently, it's 1,007 if we refresh. Oh, it went back down. So it fluctuates. This dotted line is where it closed yesterday. And if you were following the market yesterday, which y'all weren't, because why would you? It dropped a lot yesterday. So I can even look like 1 month out, 6 months out, the year to date, and then a full year ago, and then 5 years ago. So something that looks like a lot now isn't a whole lot it's still not great. Like, it's still kind of a big dip right here. But if you put money in when it was $300 a share, and now it's worth almost $2,000 a share, like all of that is like you bought it at 300 and you just hold on to it, and every year it gets more and more and more and more and more and more. Your net worth, if I had 100 shares of Amazon, I would make millions at this point. This is how people who play the stock market kind of, like, you put your retirement here. If you're a billionaire, You play the stock market. You invest in companies. You buy stocks and you wait for them to get bigger and then you sell them and then you buy more and then you sell them. Yes.
It's kind of like gambling.
I feel that way. My husband does not feel that way. Yeah. I studied this in college and it makes me nervous because at any moment it could start doing that. And as long as you're still up, then fine. But it just makes me nervous because you could lose everything. Yes.
What is a stock?
So, I'm going to do this very poorly because I never really totally understood it. If I have a company and I'm the only person, like Facebook used to be private, and then they went public. And once they're public, they sell shares. And for every share you have, you get a say in how the company does things. So, like, as long as you keep the majority share, you have the majority opinion for your company. So as long as you have 51% of the stocks of your company, then you get to, like, decide what your company does. If you split it, like, amongst people, if everybody's got, like, 25, 25, and 20, then you all, like, vote, and your vote is weighted a certain amount, and you make big decisions about the company. Like, I don't even know because that's way above my understanding. But if you've ever watched the Facebook movie, they kind of go into that because they wrote out, because Facebook was, like, co-created with that other guy, Andrew Garfield. That's not what his real name, that's his real name, Andrew Garfield's character. Him and Mark Zuckerberg, which is the character's name. I can't remember who played the other guy. They both go in together, and then Mark Zuckerberg, like, started doing stuff, I guess. I mean, this could, as accurate as that movie is, I don't know. But started doing stuff and then, like, wrote out his partner and, like, took away his shares. So he got, like, nothing. And then that guy came back and sued him, and they settled outside of court. So having shares in a company is a big deal because you get to, you also get profits from that. So it's very complicated. You can major it in college if you want to.
So it's just, if you buy a stock, you get,
like, a vote.
yeah.
Yes. Now, here's the Dow Jones. This is the stock market as a general whatever. This is today. Yesterday it dropped a lot. So this dotted line is where it closed yesterday. So it rebounded for a second, and then it came back down. And then it rebounded up here, and then it came back down.
What is that?
This is the overall value of the market. This is not money. This is points. And don't even get me started. I don't even understand it. But, because, like, this does not mean 25,000 points. But this is just today. And if you look at 5 days, and if you look at 1 month.
Is the stock market going down?
Currently, yes. 6 months. Since January, since last October, in the past 5 years.
Oh, it's at an upright. Oh.
And then max, this goes back to 1978.
Oh, wait, go to where, like, 2000, whatever it was.
So the crash is right here. This big dip right here, this is when the housing market exploded and everybody lost their houses. Not everybody, but a lot of people did. So it went from, so this was March 2018.
That's pretty high.
11,000 or 12,000 points, let's say. By January, let's see, where's the big dip? There it is. By March, it's now 6,000. So 50%, you lost half of everything. So, like, if you had $100,000 invested in the stock market, this is a very big, broad generalization. If you had $100,000 of your retirement sitting in the stock market, within 6 months, you lost $50,000. And it's not that it went anywhere. It's not that you bought stuff. It's just it was now gone. You wrote a check, ripped it up, and threw it in the trash can. It was just gone. That's what happened to a lot of people with their retirements and their savings and things they invested in the stock market, and then the stock market started diving. Banks were closing, housing market bad, and then so you ended with this. It's been recovering.
Yeah.
let's see, this was 2000, the big dip, 2009. And then, so by 2012, it had recovered. And now it's up, 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 up. Now, notice how steep it is. There are several people out there saying, like, it's climbing too fast. Like, there's going to be another dip. Like, it can't keep this momentum. You can't keep this kind of momentum forever. It's just not, it just doesn't work. You can't. It's inflation. It's like if you, what's something that y'all might understand is, like, expensive?
Gas.
Gas hasn't really been that crazy. It's like if you went, I mean, I guess I could say gas. When I was a kid, I remember gas being $1 something.
What?
When I was your age-ish, it used to be like $1 something, and then it started climbing. The most I ever paid for a gallon of gas was when I lived in California in 2010, and we paid almost $5 a gallon. Yeah. My tiny little car had 10? So it was, maybe not 10, maybe 8. I don't remember. It's been a long time since I've had that tiny car. It used to cost as much as it cost me to fill up my big car to fill up my little car.
Which is bad.
Yeah. Yes.
Can you invest in the stock market as like kid?
No.
As like what?
You have, because you can't even have a bank account yet.
Yeah.
You can have like you could go like through your parents and they could do it, but you can, I don't want to step out of my, yeah, because I'm not knowledgeable enough. I'd have to ask my husband. He knows more than I do. So this is Google, just another example. They had their state of address thing, their big, hey, these are all the cool things coming out in the next year, day before yesterday. So ideally, you would think that it would be going up, 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 because everybody's like, ooh, new stuff. But sadly, it's not. It looks really good for a day. Yeah. Like okay. It came back up. This morning it wasn't looking too great. But then you look, oh. See, and I think this is the sad part right here, is like this was after they announced all the cool stuff. And it like went, because there was a lot of stuff people thought they were going to announce that they didn't.
Like what?
They were going to like release updated stuff, but they didn't.
This is Alphabet 8.
It's Google. The other thing is, there's one more I wanted to show you just because I like to pick, and I'm a numbers person. Oh. So Nike.
Oh.
Everybody wanted to talk about how Nike, they're suffering. They're really not.
No.
So this is just today. I mean, so they're up from where they were yesterday. If you look at 5 days, it looks bad. But when you look at what the numbers are, this is $80. This is $75. $76. So they've lost $4 a share. Now, if you have 100 stocks, that's $400 that you've lost within a week. But when you look at the overall, month's not good either. But 6 months is not bad. This isn't great right here. Boom, like crash.
It was bad earlier, because it looks like that was even worse.
So this was when everybody, I think about this time is when everybody was like,
Burning
this is when everybody started burning their expensive Nike shoes that they had already bought.
Why?
Because of the Colin Kaepernick stuff. But heads up, if you want to boycott something, don't burn the things you already bought, because they already have your money. Because they didn't agree with the advertising. But anyway, back to the numbers, because that's what I care about. This little dip right here was that whole boycott, and then they rebounded within like 5 days. So, now this dip right here, I'd be interested to know what's happened since September 28th that's made it take a nosedive, because that doesn't look very good. I mean, that's a big jump. If you look at year, like what's happening right now, it's not good. I'm curious.
Where is it?
It's down here.
Why?
I don't know. It's a good question.
Burn the store.
Anyway, so to notes, because we're almost out of time. Come back, notes.
Yo, what's happening?
So,
No.
everything you own is an asset. Everything you owe is a liability. Add these up, subtract, and